if this bot can make 1,800 in one day, it's risk of $10. Wow. So I just want to show you why bots at times can be better than humans in trading. Bots trade the ideas we have as humans, but without the psychological hindrances. Hello everyone, good day to you all. Welcome to KryptOkib's Trading Hub. My name is KryptOkib. It's been a long while since I last recorded any video, and I've been busy. Yeah, I've been very busy with some bot development, and I just want to show a bit of what I've been up to this past few months. Not perfect, but then at least it's something tangible enough to make a review on. So I've been working on these volatility indices for a while now, and I find them quite interesting to work with. Sometimes it can be very volatile without the pullbacks, and sometimes, just like you can see, and sometimes they can be very ranging, that sometimes you just get boring. It gets boring. But comparing this to crypto, I think it's highly volatile. This is highly volatile, especially the volatility 100 index. And as you can see, from like 20th of March, it's been making some big moves. Even when it downtrends powerfully. But then, this is not to say it doesn't range. As you can see, it has some stupid or crazy weeks. So it can also frustrate as well as it can make you good money. So I've been working on my bot developments, and I just want to compare human emotions to the psychology of a bot. So today, I was in a trade from like 2 days ago, I think. I took a trade on a daily on this hedge, which I closed yesterday before the start of the day, or as the day was starting, because I got filled with some kind of emotions, or let me say, I saw some signs of reversals, which I didn't wait for full confirmation before I took the decision to exit the trade. Here is a trade of the 4 hour. As you can see, this was the entry. I was in a bit of drawdown, stop loss was a bit below, but then I hesitated early before the real move even started. And for the whole day yesterday, the daily started at on this 4 hour candle, and here is the start of a new day now. So on 4 hour for the whole day, it was all blue candle or green candle, up move, no single down move on the 4 hour. But if you go to the 1 hour, this was the start of the day. You can see some down moves, but these are not really corrections. So the market is just too parabolic. So after I exited this trade, I went to bed. I waited a little and I went to bed. But before I went to bed, here is it on the 15 minutes. The movement was becoming weak. It was becoming weak. And then the moment I saw this weakness, I just thought to myself, and here we have a very minor correction, then another impulse move, another minor correction. Didn't even get to this flip zone, not to talk of the demand. And the movement started getting weak. The price was coming down deep into this point. As I saw it, I also were, let me just exit the trade and wait for a pullback to around this level. But then what happened next? I missed a whole lot of move, and that is 70%. So after I hesitated, I waited a while. I thought I left when this candle was building, so the movement was weak, really weak, and I thought, no, I can't just carry again that. I should just set a limit order around there and then go to bed. So I went to bed. On coming back, I came back on 9 around this point. I saw this weak movement to the upside. It was really weak until this point when the momentum started coming in. And I still was thinking, this move is not what I like to see. I like to see strong momentum moves. And they weren't coming. So I just said, okay, let me wait and see if this pullback will be deep enough to at least make up to 50% correction of this swing. But then it didn't happen. And because it didn't happen, this is zigzag indicator, by the way, the yellow 9, to show me structure without me having to draw manually. So when this formed the bottom, I just couldn't get it because it was another shallow pullback. And what even made me not to get in is not because of this shallow pullback. Now let me show you something. This is the same volatility 100 index, but on Akanashi. I've been using Akanashi of late. So if I go to the 15 minutes time frame, so that was where I hesitated the trade, and then this moves to were not that strong. If you want to read the structure manually, you can see some high lows, but then I just go with the zigzag. So this move was shallow, but apart from this move being shallow, after I printed this blue candle, I could easily have taken an entry. Then my stop will be below. I could have made a lot of money from there. But then, apart from the move being shallow, now look at something. There was huge divergence. Let me place a box around this spot now and go to the 1 hour. If you look on the 1 hour as well, you can see this top. This is CCI indicator, by the way. So there was huge divergence from this indicator to this point, and there are still divergence at this moment. And I know sometimes divergence happen in the market, but the market keeps grinding up. But then I wasn't willing to bet on it, so I hesitated based on this divergence that I saw at this point and the weakness on 15 minutes. So I hesitated. Then the divergence continued, and I was here and looking at this whole parabolic move. I expected a pullback to at least this level. Coupled with the divergence, I couldn't take the trade. So I hesitated. And what happened is this move, then another move came down. But then what I failed to realize at this point exactly, when this move came back again, this could have given me another entry. This came back to this flip zone. We see a touch here, then closest green or blue, I broke. Stop could have been below, and then could have cut the move, but I didn't, because looking at this point to this point, there was still divergence. As you can see, there was still divergence. So I couldn't. Yeah, there was divergence. Price came down, but I believed, coupled with the 1 hour divergence, that we are going to get a break of structure on 15 minutes. Like get a break of structure on 15 minutes. Price comes down. Let me see if I can draw this. I was expecting something like this. Price retest and then create a sort of ABC. So I will then pick my entry on the 1 hour. I failed to realize that there was an hidden bullish divergence. So this, seeing only the bearish divergence, not seeing the bullish divergence, coupled with my Akanashi entry here, I just left the entry and coupled with a bullish trend, which seems to be extremely bullish on both the 1 hour and the 4 hour. So I was blinded by emotions because I wanted something to happen that the market wasn't really willing to do. This is where human emotions or human psychology hinders in our trading. I could have picked a trade here, I could have picked one, I could even have picked one here. They would have worked that way because trend was bullish, making higher highs and higher lows, as even shown on the trend line. Hidden divergences were being formed. But I was blinded by the bearish divergence which was showing on the H4. Was it even on the H4? No, bearish divergence on the H4, but on the 1 hour, as you can see, it's very obvious. So because of that, I was expecting a bearish move, at least a pullback. And by my rule, if I see a bearish divergence at the 1 hour, I want to see a red Ikanashi bar being printed and closes as red. Then on break of the low, I take the trade. But I didn't even wait to see that. All because of emotions. I just wanted it to happen. And that isn't what the market is willing to do. The market wasn't ready to come back at that point. And I kept waiting for the pullback, which is never coming. Instead of just picking this trade and plan my risk accordingly. Then at this point now, the same thing is happening, but then price is still too parabolic for me. As you can see, an entry could have been picked at this point. Even a small token. Now we have an SFP on this side, which seems okay. That is not even the first SFP, but we see how it will go. And on the daily, we also have, oh, let me go back to this. I can actually chart. I'm developing some bots, so I have got this indicator on it, trying different types of strategies to see which one gives me the best risk reward, as in the best profit. So on the daily, we have this divergence now. This side to this side, this side to this side. 4 hour, no divergence yet. Extremely bullish, parabolic. 1 hour, divergence is purely obvious. 15 minutes, also, there is divergence. But then it seems not ready. So, and if you look at all these lows, there are hidden divergences on all of them. Like here, we have this lower low on this indicator. And we have higher lows here, which is divergence, coupled with a bullish structure, retest of trend line. An entry should be made here, even if it will hit stop loss. At least it's a calculated risk. But I wasn't willing. And now see, I developed an EMA, 3 EMA bots like a month ago, and I've put it on a demo account. It has traded for a month and like a week now. And the results are amazing. So all the results is amazing. So I just want to show you why bots at times can be better than humans in trading. Bots trade the ideas we have as humans, but without the psychological hindrances. Like now, all through yesterday, I wanted to pick a trade. I couldn't. But look at this bot. It's on 6 minutes. It's playing on a single time frame, no multiple analysis. I have one that uses 2-3 time frames, but this particular one is trading just a single time frame. This is a result for 1 month. Before I go deep into that, it started around 19 February to date, and here is the result. Okay, it has made a 2,335 in profit, and it's not just on volatility 100 days. I have 3 bots running, one on volatility 100, 2 on volatility 100, but different time frames. This particular one runs on 6 minutes direct time frame. Here is the entry time frame, 6 minutes, and here is a trend line, low time frame only, which means it uses just this 6 minutes alone. If I want a time frame trend bias, I can use this, but then I will have to change these to align both high time frame and low time frame. I can also use high time frame alone, but this particular one is running on a single time frame, and the time frame is 6 minutes. So as you can see, let me now show you. This is 100 index, right? The one that emotions didn't let me take. Let me now show you the result of this bot yesterday. This is today. So yesterday is 29th. It is unbelievable. As you can see, there are some losses as well as there are some profits, and in total it has made 1,700. I don't think that's yesterday alone. If I look at it, 28 MT5, they do miss. You put 29, they put some of 28 and maybe some of 30. Okay, 28 to 29. So it has made 1,700 it made 1,700 in just one day. And I see I'm running trades and these running trades are running on $385 in profit. And this is just, oh no, wait, hold on. This is yesterday 28. I have 3 pieces running on symbol of symbols. Okay, I have crash it into yesterday. I'm just testing this strategy, this EMA strategy on crash bet on volatility index. Yesterday it made $1,815 in one day. This is the craziest results I've gotten so far from this bot in one day since the past 1 month. It has made some excellent wins, then pull back, losing some, wins some, losing some, but this was made in just one day. And the funniest thing is, look at the risk. Look at the risk amount is $10. It's a fixed risk, which means I'm using, instead of using percentage of account balance, I'm using a fixed risk, and fixed risk is just $10. But $10 cannot in some cases go with the minimum lot size. So I have this caveat that, where is it? Okay, yeah, that if the calculated size using $10 from entry to stop loss, if the size is below the minimum lot size, which is 0.2, then it should use 0.2, the minimum, as the size to trade with. So in some cases it trades with a minimum size, and if the $10 risk is able to give a size higher than the minimum lot size, then it will go with that size. As you can see here, we have 0.33, 0.38, 32, 0. These are above the minimum lot size, so the risk here is plainly $10. And as you can see here, now it made like 3R, going by the $10 risk, 3R here, like 6R, and here you see 0.2, 0.2. Those instances, the risk of $10 is giving me a lot size lower than the minimum lot size. So I just ask you to go with the minimum instead of not taking the trade. And we've seen some profits, and that is where we see all these big wins. And then there are some losses initially. This was from the previous day. And then this particular one, we have this magic number 10027. Those are the trades running on the other. It's still the same. This, I think, is this, but this is running on 1 minute time frame. Yes, 1 minute time frame, and using 20 minutes time frame as high time frame buyers. And if you see here, it says high time frame only, which means it's looking for the signals on 20 minutes, but timing the entries on 1 minute. So if I go on the 1 minute charts, here you can see at this point it couldn't take a trade. It took a trade here, it was in small profits, and now in drawdown. But then if I go back to the other one, which is on 6 minutes, this seems to be better than the other one trading on both 1 minute and 20 minutes. As you can see from this point, it made huge profits, and the 1 minute, but the one running on the 1 minute is the same 3 EMA strategy, but just different time frames. One single time frame, 2 time frames. So the one using the direct time frame is way better. And this is even one of the least performing bots I have built. And I wonder if this bot can make 1,800 in one day with its risk of $10. Wow. It took a lot of trades that a manually wouldn't be able to take. And then considering the fact that I hesitated on many entries here due to the fact that I was looking at the bearish divergence that wasn't ready to play, and the bot just kept taking the trade instead. I didn't interfere with it, but then it was taking the trade and it was winning. It trails stop, it does everything automatically. Open the trade, positions the stop losses. If it's in profit by some design, it starts trailing the stops. And as you can see here, there are some crazy losses. Like if you look at this trade here, the stop loss must be massive. It came in profit a little, only to go back high stop loss at some point. There are some other trades that hit stop loss, which if I was to be managing them, I will close them manually. Look at this. This took a sell here, price came on the way here, but ended up with a stop loss. But overall, the boat has performed wonderfully. And if I go back to since the time we started, that is around February 19 to date, maybe 30, you can see that overall performance is just like 1,006, and this is like all the symbols, right? Okay, this is just the volatility one, right? So it was like all the money, it lost all the money before, but it didn't quite lose it. But then it was making like $1,000, going back to 500, go back to 1,000, 1,005, go back to 800 until yesterday. And so if you look, let me check the crash. The crash, most of them are like stop loss. That's because they hit stop loss in profit. As you can see, this one is stop loss hit. Oh, this one is take profit, but this one is stop loss hit, but it's still profitable. Most of this crash, they hit take profit a lot, but looking at the profit made in 1 month is 500. Why? The other one, the one on volatility, this boom, I took this one straight manually. So I'm not looking at that. I just was testing a new strategy I wanted to try, and I was taking a trade to see. So, but the volatility 100 is purely bought. And if you see a lot of losing trades too, a lot of losing streaks, which shows that no strategy is 100%. And considering that this is an EMA, 3 EMA crossover, it's crazy. And you hardly see take profit hit. And if you look at the take profit margin is, take profit is 8R. I'm targeting 8R. So it's funny, it's unrealistic, I know. But then I just have to make it open because I prefer to trade stops.